in the U.S. And so I'm doing a beauty pitch with John Paul DiGiorio. And then I go back home, then I come back out, and then I go to the Super Zoo, which is the pet show in Vegas. So 3 Vegas trips in 20 days. And then in between there's Robert Herjavec's wedding, by the way. So that's kind of interesting. He's getting married to a Dancing with the Stars girl.
Right. Yeah.
And so I do about 35 trade shows a year, and that's just part of what I do is on and on and on. So I'm at one show, these 2 kids come up to me and they're like, hey, we've got this patent on a nightlight for your toilet bowl. Okay? Has anyone seen that product yet, by the way? Okay, we did $600,000 yesterday on Amazon, okay? And it's doing $2 million a month. And so, and I said, what is a nightlight for your toilet bowl? Well, it's 4 o'clock in the morning, you get up, you got to go to the bathroom, you get within 10 feet of your toilet, and it lights up. It's motion activated. 6 different lights.
Hotels could use that.
Yes, hotels. Yeah. And it's motion activated with a dimmer switch, $14.95. We make it for $2.50. Now, these kids had no money, so we put it, I didn't spend a lot of money. I went on Facebook and we did $1,000 worth of ads. And it generated $18,000 in sales. And then we spent $2,000, it did $36,000. And now we're at $8,000 a day, and it's not still generating 18 times, but it's doing $40,000 a day in sales on $8,000, $1.2 million a month on Facebook, and it's doing $1 million a month on Amazon. So $2 million. The point of all of this is we test before we invest. So we have these opportunities that are coming in that we can bring to the venture, and that have product. I look for proof of concept, and so what I do is bring the deals in. Then it goes to, this is the D, the deal flow. This is the V, the vetting, and then there's the Rolodex along with all of us, because we all have a Rolodex. There he is, Bernt. But the Rolodex is then getting the distribution in as many places as possible. So retail, Amazon, Instagram, Pinterest, et cetera, et cetera.
And let me properly introduce Bernt. So I actually met Bernt through Kevin on another deal. So that's how life goes, right? And Bernt is currently partners with Tommy Hilfiger, about a $7 billion a year brand. He, in my opinion, is one of the biggest branding moguls and licensing moguls in the world, dealing with the biggest celebrities in the world: Jennifer Lopez, Nicki Minaj, Adam Levine, Steven Tyler, American Idol, just you name it. And then in addition to that, in his previous life, he's done billions of dollars worth of apparel sales in the companies ran, and he even opened up retail outlets all over the globe. So when it comes to branding and building a brand and the retail distribution, whether it's manufacturing, whether it's all that kind of stuff, and I like bragging about it. He doesn't like when I do this, so I don't want to be embarrassing, but you can go ahead and say something, Bernt.
Well, you kind of said it all. That's pretty much what it is. we have a company called Star Branding, and the premise when we started out, it was real simple and real clear. We would say stars can be brands. And as we expanded, we had to also expand that definition that brands can be stars. So, and what we really did is we have partners, Tommy, his brother, Andy Hilfiger, one other guy, and myself. We run Star Branding. And we started out, we partnered with a company called Li & Fung. It's the largest apparel manufacturer in the world. We created a new entity which we called MESH, Music, Entertainment, and Sport Holdings. And I was the founding CEO of MESH. And so we set out to do, a couple of deals. And we ended up, the first deal that we did was Jennifer Lopez and then husband Mark Anthony. And it was a very sizable deal, and it was all great. We did it with Kohl's, and it was a DTR, direct to retail. And we have $3.5 billion in minimum guarantees from Kohl's to build that. So it's sizable, and it works really great all the way around. It was interesting, just as an aside, in business there's always different things. So we had launched everything. We were completely ready. It was a his and hers campaign. So Jennifer was obviously the hers. Then husband Mark Anthony was the his. Campaigns were shot, top-notch photographers. Campaign was ready to launch. We were in 30 days of going live. I was at Hotel Maurice in Paris. I remember it very well. And I was back in the day of the Blackberries. My Blackberry was going nuts, jumping. It's middle of the night. So it's like, why do they keep, everybody knows I'm traveling. I finally answered. Jennifer and Mark has just announced that they are splitting up. I'm like, what? They couldn't wait 30 days? 30 days!
Yeah, timing is everything.
Timing is absolutely. We had to rework everything, but we launched, and luckily, big success. And as Greg says, since then, when you launch with a bang like that, deal flow going to the D becomes kind of very organic. Everyone wants a deal now.
It heightened the awareness of both of them. Actually, for the 30 days, right?
Oh, 100%. It was great.
Yeah.
And maybe Trump was behind it or something.
Who knows? It's funny. We're in the Trump Tower. That's where our office is. So you never know.
I'm visiting him in his office, and we're like the 27th floor?
23rd.
23rd. So and all of a sudden we hear this big clunk, like this big, super loud clunk. I go, whoa! He goes, oh, don't worry, that's Donald Trump's weight room right above
His
you.
gym is about us when he drops the weight. So, yeah, and we did a number of transactions after that, and obviously, so we did Rolling Stones, and we did Steven Tyler, and we did Nicki Minaj and Adam Levine, and a whole slew of other things, and also worked on just brands. So we have done anything from Kent and Curvin, which is a high-end luxury brand that's sold at Saks and Neiman's and Bloomingdale's. So we work from the highest levels and all the way down to the Walmart level. So we have a very good distribution network.
So I just want to say I'm very humble and just thankful that Kevin and Bernt and Mike, they all flew out here on their own dime. They're all here as a request to me to support Freedom Fest and what we're doing with the pitch tank. And we really are all passionate about helping these entrepreneurs and creating the jobs and stimulating the economy and perpetuating free enterprise and perpetuating capitalism. And here's another potential client here. It's a whole other story. But Clarissa came over here for that. She's got an amazing story, and she's another person that needs to get some capital. I'll give you the mic. So it's exciting. So we want to introduce this to you, and we're looking for people that want to get involved in our inner circle type thing, our little mastermind. And if you're interested in the fund, I do have. We put together. How many people would like some information about the fund? Matter of fact, do you want one? Just take this.
That's a question first.
Sure.
Mike's,
And pass it around.
one of
Take
one
one
of
if you
his
want and pass it around.
premises, or towards the end before the other gentlemen were speaking, was in how do we find a way to protect the investors' money? But I don't think you followed through with that. How?
I'm glad that's a good point. It's a good question. And it's actually one I wanted to end on when we finish. But
Oh, okay, well then.
no. Now's a fun. Now it's a good question and a good time. Through the 20 years of doing investment banking and traveling around the world with doing transactions, we were constantly doing a deal, raising the money, going to a closing, cutting a check. Here's a check. Next deal, get a commission, move on. And one of the things that has bothered me as we moved away from the public IPOs that we did so many of to the entrepreneurial and the private companies was I started going into them, and I was investing right alongside with my own money. And more often than not, they give you a pitch, they have their PowerPoint, they have their offering document, but so often they don't do what they say they're going to do. They start shifting and they start changing. And so one of the things that I decided to do with this particular fund that you have in your hand was I want to securitize it. And when I first mentioned it to Greg, and I said, well, he said, what do you mean, collateralize it, securitize it? I mean, when I sit down with the investor, with the entrepreneur, the company, I say, okay, we're going to put up $200,000 for your marketing campaign so you can go and raise $2 million, $5 million, $10 million, $20 million, whatever it is. We're going to give you the funds that it takes, the money to make money. But whatever you have that's of value, we want to protect that investment. It's like, what? You know what? Because that's the problem. And then they begin to listen, and then he kind of got in with my thinking, and that is this. Too many entrepreneurs want your money and you to take the risk, and if it works, great. They're going to get a new car, they're going to get a new office, they're going to get a boat, they're going to live high. If it doesn't work, you lose your money. So I'm like, okay, if you believe so much that this program that you're going to go after with your company and your story is real and true, you got to take a risk with us. So it's like, well, what if we're doing a basic startup that's pre-revenue or just into revenue, and they don't have real estate they're in? I said, look, they have something. They either have IT, they've got patents, they've got something, or else why are they trying to raise money? I mean, we're not going to do basic startups. We're doing people that have a real story that are doing something. So if they don't want to put it up, then we probably won't do. It will have to be a story from the heavens for them not to put up anything, because everybody has something that deserves to have money. So the answer to your question is, my plan is to go into each and every issuer company and sit down with them and make sure they're taking risk with us, and if they don't perform, then we're going to end up with some protection and some kind of collateral.
And let me answer the same question a different way, because the way this was structured, so typically in early stage investments, you're going to make your investment, you're going to wait for an exit. They're going to get bought out, they're going to go IPO, something like that, right? And that could be 3, 5, 7 years down the road before that happens. With this fund was, we want to get the people introduced to this kind of investing, and this way we're going to loan the money as a bridge fund, get some warrants and some options, some equity kickers back for that loan, and then our number one job is that the $200,000, the marketing campaign that we create, we need to get back our 200 minimum.
The first dollar that comes in,
First 200
until the fund gets its money back, comes into the fund.
Right.
So, and it's all short term. It should 6 months is a long time. It should be under 6 months. Put the money in, do the campaign, raise some money. First 200 and something, 250 that comes in goes to us. We're paid back. We have our money. We'll do another transaction. The other side of that story is we also will have the opportunity to stay with them and go into another fund. But this fund that you have in your hands is strictly to put up the marketing money. If you read, I think it was July 7th, I'm not positive, but somewhere in there was a story in the Wall Street Journal. And one of the things they were talking about was why are no entrepreneurs really using the mini IPO process? All the new laws, and nobody's really out there doing it. Why? Because of what I said a little earlier, because it costs too much damn money to go out and market. And what happened, I had a company and a client that was in one of the first transactions in California, and I told them, I said, look, I've been doing this for 20 years. I've done hundreds of deals. If you just put this on a platform and you expect people that have registered to open up and read your thing and get excited about it, it's not going to happen. You're going to have to market. You're going to have to tell the story. You're going to have to communicate with the people that are registered on these various crowdfundings and job act portals. They put it up, didn't spend one penny on marketing. They were only trying to raise $2.5 million. They raised nothing. And and the Wall Street Journal article said same thing's happening. People putting their product, their service up. They have an offering document. They paid legal. They paid auditing. They paid all their people in the various teamwork. They register it, upload it, and it sits there. So what we're doing is taking all that experience that I have and all the experience that we have, and I've been working with Congressman McHenry and the other people that put together these laws over the last 4 or 5 years, hoping and watching, and now that they're there, we're going to be right on the front lines, and we understand behind the scenes how it's supposed to work. And what has to happen first is you got to have a marketing machine that goes out and tells the story to get more money. So that's what we're doing. We're giving them money, we're going to get it back first, protect it, and then keep moving on.
And a couple of caveats. We can share with anybody on a one-on-one the marketing strategy we employ, but it basically is like this. With the new laws, we can now buy a list of accredited investors. The data companies are sharing the data, credit card information, history, everything about you. So I can say, I want people to have a $3 million net worth, that have a trade account at Scottrade, that maybe like gold and silver, maybe like whatever that is. We can profile that investor. We put together a really nice mailer, and we mail 100,000 people. We expect a 1% response. We get 1,000 leads that read the mailer. Well, I'm interested in this investment. Out of that investment, we got to get 4 out of 1,000 to put up 50 grand. We get our 200 grand back. So we've literally, with the right story, the right structure, the right corporate finance, we feel like we've literally almost, there's no guarantee, there's always risk. We've almost eliminated the risk of raising capital. And with the right deals, it's scalable. They need to raise 3 million, 6 million, 9 million, 20 million, 30 million. We just keep doing the mailings. There's over 9 million accredited investors, and you could not do this until this new law. The second thing is, as every deal we negotiate, when we were masterminding together, there is going to be certain deals where we do want to buy equity. So even though we're doing the bridge loan as the fund, we as individuals and network and people that invest in the fund, we're going to grant and get granted the rights to be people that can get involved in the equity and maybe at like a 20% discount to what everybody else is getting in. So we're doing the bridge loan, we have the rights to come in. So we're going to structure those kind of things. We're going to be fair to the entrepreneur, we're going to be fair to the issuers, right? And we're going to be fair to us, but our job is to get a little pieces of equity, and then we're going to take this fund, and in 3 years we're going to liquidate it. We're going to distribute every warrant, every stock, everything, where everyone's going to get their pro rata share. And in the meantime, 14% annualized coupon. So I handed out those forms. If anyone's interested in this, we want to, Ed, my business partner, everyone's probably met Ed. We want to get your information, and we'll follow up with you and talk to you about it. We're not asking anyone to write a check. We're very picky about who we want in our good old boys club, right? We want the right people. It's got to be right for you. We would love to have you. I'd love to talk to you about it. And then what we're going to do is we're going to take what we call indications of interest. We're doing, it's $1.5 million fund. So we're only going to do $500,000 minimum. So we won't break escrow until we raise $500,000. That allows us to do 2 deals. And then we're going to do $1.5 million maximum. And we believe at this event we'll get way more commitments for that.
For a minimum, is there a minimum from an individual investor?
No. We're not with cap it at $1.5 million. Okay. Michael's saying we didn't cap it at $1.5 million, so we might go higher than that even. So again, we think it's cool. Any other questions?
The minimum to put in $25,050. What's the minimum investment?
I think, we don't have it set.
Oh.
I think a general rule of principle is for something like this, $25,000 would be a reasonable amount of money to put in. If you want to put in more, there's no limit, max, if somebody wants to put additional capital, but I think that's what people should be thinking about.
Follow-up question. If your determination is basically 6 months turnover, can that money then be left in to be reinvested as opposed to taking it out?
Right.
Short-term gains
It will stay in. We have 2 programs in there. One is for a year and one is for 3 years.
Yeah, and your investment stays in, but we're going to turn our loan over. So we loan to Carissa, we get it back. We loan to this guy, we get it back. So we're going to do that turnover of the $200,000 twice a year. So the goal is to do 6, 8 of these, 10 of these a year, get a little piece of equity.
One thing you have to keep in mind is entrepreneurs are going to balk at my structure.
Right.
They're not going to just like freely say, okay, I'll put up my patent, I'll put up my intellectual property, I'll put up my product or service. So it's not going to be the easiest task. But those people that want to come on board and take advantage of all the experience that we have and all the networking and contacts that we have and the capabilities we have, it'll be worth it because they're going to put their skin in the game, they're going to be on the team, they're going to be at risk, and that's the way it should be.
And let me give you like one quick example. So this strategy really works for B2C type deals because we're doing a 100,000 piece mailer. We'd like to get some clients and customers out of it. So one of the deals that I like that I'm going to bring to our mastermind is called Passion for Life. And it's a liquid nutritional supplement. They're doing about $25,000 a month revenue right now. They got Regis as a testimony. They got 9 or 10 San Diego Chargers. It's a great nutritional supplement, so people that don't like to take pills, they can just drink their nutrition, their vitamins, everything. I love it. And I know from a marketing perspective, if you give me a $200,000, $300,000, $400,000 marketing campaign to market this online, like Kevin was just talking about with the toilet bowl light, I can take them to $1 million a month. But I got to have the $200,000 or $300,000. So we do a mailer. We go raise them a couple $1 million. You allocate the stuff for the growth and the expansion, and now not only are they getting investor capital from the mailing, but they're going to have all those 100,000 people. How many are going to go, I'd like to check out that nutritional supplement? They go to the website and they order it. So you're getting a double whammy there. And not to mention, what I don't know where Bernt went, but Bernt's always talking about brand equity. And now you get that brand out in front of 100,000 people, that's brand equity. So now everything starts to build that value of that company. And that's one, again, going back to the vetting process and the deal flow process, I'm bringing that deal. It's got to pass muster with Kevin. It's got to go through Kevin Harrington, and we got Caleb Huey that came in a little bit late, but he's our partner on the direct mail campaigns. We're going to be talking to him and his dad, going, hey, they have done billions of direct mail pieces, billions in the last 30 years, billions of direct mail pieces to the investment community. They've been responsible in generating over $60 billion in investment capital through their direct mail programs over the years. So they understand, we can go to them and go, what do you think of this? Will this healthcare product go in a direct mail program? What do you think? And they'll give us some real world experience on what they've had in the past to show what's going on. So let's kind of go, if there's any more questions. I don't want to cut off the questions, but I want to let everyone kind of go back to mingling. So here's.
Can I just ask one short one?
Sure.
You mentioned something about 14%, that kind of went right through me. What were you talking about?
It's actually 15, but up to 15% is what the structure is. I just went along with the 14 because it sounded good too. But I think that the idea is this: because of the way we've structured this, I'm looking at the cookie cutter hypothetical program of being $200,000 for the campaign, put it in, plan it out, have it returned within 6 months, come back with $250, and as we do, each deal is only $200. So as we do multiple deals, each deal is structured to have enough money for the time period to be able to pay that in a 15% coupon. So they will accumulate as we do more and more transactions, and should be sufficient to pay the people that have invested that amount of money.
One more question, does your good old boys club include women?
Absolutely. and if you'll give me a new name, if you'll give me a new name, I'll change the name. I'm actually one of those guys that think women should run everything. Like, I'm not going to vote for Hillary, so don't take that the wrong way. But I think it would be great if women run everything, and we just get to play golf and go like boating and stuff like that, and fishing, right?
Great ideal world.
The good old club, how about just...
So, the last thing I want to let you guys know too is on the back of this, our other breakouts are Friday and Saturday, so Kevin's going to be doing this. We're going to be kind of rehashing this, so if you guys want to get it to sink in, you want to hear it again, you want to bring anybody with you, we'd love to have you do
Come by
that.
the booth, we'll tell you the next one we're doing.
Yeah. So I think that's it, huh?
Okay.
Thank you, everybody.